Hello guys, welcome to yet another lesson of accounting. We are continuing with the November 2017 question paper, doing question one. We've already answered some of the questions here. So we've answered the calculating the correct totals for C, RJ and CPJ. And then what we need to do after this is to calculate the bank account balance. And then after calculating the bank balance, we'll do the bank reconciliation statement. And after that, we'll answer the internal control related questions. All right, let us go. So we're going to first calculate the bank account balance. So in order to calculate the bank account balance, we need to find the balance in the previous month, which you'll find in the bank reconciliation statement. So in the previous month, we had a negative balance on the bank account in the ledger. That is unfavorable. That's what it means. So we will take this. So we'll take 5 to 10, and then we're going to add the receivables total, the receipts total, cash receipts general total, and then we're going to subtract the total for cash payments. And the answer to that is going to be 4,960. So that is the bank account balance. And then after that, now let us answer the following question, which says, prepare the bank reconciliation statement on the 30th of June, 2017. All right, let's go. So the first thing that you need to put in the bank reconciliation statement is obviously the balance as per bank statement. So the information given here, it says the bank statement on the 30th of June 2017 reflected a balance of R. So we don't know. It will probably have it as a balancing figure. So let us fill out the things that we know we need to fill out. So we already did say that this is the outstanding deposit because it is appearing in the cash receipts journal, but it is not appearing in the June bank statement. So let us go. So let's say outstanding deposit. The outstanding deposits, they will go to, correct the spelling there. So outstanding deposit, those ones, they go into the credit side, right? Because deposits increase the bank account and increase what the bank owes to the business. And we do the bank reconciliation statement in the perspective of the bank. So 40,500. And then after that, we're gonna do our outstanding checks. So let me say outstanding checks. So outstanding checks. The first check that we're going to start with is obviously this one. It is post-dated and it is still not reflected in the bank statement. So it's still a timing difference that exists. So we're going to put 819, check 819, and then we know that the checks, they go onto the debit side and the total amount is 7,650, right? Cool. And then the next check that we want to deal with is check 870 dated 25 June for 16,800. So we're going to have check 870 and the check is 16,800. Cool. And then we're also going to have an outstanding EFT. So there's an outstanding EFT. So you're going to call this one EFT 21, and for how much is it? It is for 2,250. $2,250. And we know that in the bank reconciliation statement, right, we're dealing with timing differences. So we're done now with the timing differences, but the other thing that we need to deal with is errors made by the bank. And they did tell us here that the bank did make an error when doing the service fees and that they were overstated by 900. So in other words, the debit side should have had 320 here instead of having 1,220, and therefore to correct the debit side error, you have to correct it in the credit side. So we're going to take that 900. So we're going to say credit error made by the bank. You can say, for instance, credit service fees error, whatever that you decide to call it, and it will go into the credit side because the debit side is overstated. So if you put it in the credit, it's going to cancel the amount that is on the debit side. Cool. And then the last thing that you're going to put, because now we have dealt with the timing differences and we've also dealt with the errors made by the bank. So the last thing that you need to put then in this bank reconciliation statement is the bank account in the ledger. Bank account in the ledger. So the bank account in the ledger, it was a positive amount, and we know that the bank account balance in the ledger, when it is positive, it goes into the debit. When it is negative, it goes into the credit. In this case, we have a positive balance, so we're going to put the 4,960 on the debit side. And then what we need to do then, so there's one thing that we don't have that we do need to have this bank reconciliation statement complete, is the balance as per bank statement. So we can see here which side is bigger. So the credit side is bigger, so we're going to total that one up. So we're going to say 41,400. And then what we need to do is to put that same balance on this side, 41,400. And then we need to subtract all these amounts on the debit side in order to be able to get the balance as per bank account. So when you subtract all these amounts and say 41,400 minus 4,960 minus 2,250 minus 16,800 minus 7,650, you will get a bank balance as per bank statement of 9,740, and that will complete your bank reconciliation statement. I hope that has been clear, and then we just move on to the next question now. So I've answered the question on the bank reconciliation statement, and then the last question, it says, explain the problem relating to deposits, quote evidence, explain 2 strategies to prevent this in future, and this is 4 marks. So clearly what they're saying here, the first mark, you identify the problem. The second mark, you quote the evidence. The third mark is for the first strategy to prevent this in future. And then the other mark is for you coming up with the second strategy to deal with this issue. So let us go. So let us explain the problem first and quote the evidence. So the problem that I saw in this case, so you can see, look at the bank reconciliation of May 2017. You have a deposit money that came in on the 17th of May 2017, and money that came in on the 31 of May 2017. It came in the cash receipts journal, and this money only went into the bank statement. The first deposit of 30,000, which was on 17 May, was only received in the bank statement on the 2nd of June. What was the reason for that? So the deposits, what I'm seeing here is that the deposits are not being promptly made. So there's a time lag that happens between us receiving the money and us making the deposit. And then the deposit that came into the business on the 31st of May only went into the bank statement on the 16th of June. So that is a lot of time between those times. So my problem that I'll identify is that deposits are not being made promptly. And then evidence outstanding deposit of 30,000 So I'll say deposit of 30,000. So I'll say, let me put it this way. I want to say outstanding deposit. I'm gonna say deposit of 30,000 received on the 17th of May, only reflected in the bank statement on 2 June. And then the deposit, I think the amount was, let's just check it. So the other deposit was 16,200. So the deposit of 16,000, the deposit of 16,200 received on 31 May only reflected in the bank statement only reflected in the bank statement on 16 June. So, I mean, you could have quoted just one evidence and then move into strategies. I just like to make sure. And then explain 2 strategies to prevent this in future. So the first strategy that I would put forward is I'd say hire a security company that will collect and deposit money on a daily basis. So that security company comes in every day in the morning and they take the money to deposit it. So that it's not the role of the employees, such that if they slack or they decide to take the money and replace it at a future date, so that it's not the case. So hire security company, they come in every day, they take the money and they deposit, so that you don't sit with a lot of amount that is not being deposited in the bank. And then the other strategy that I thought of, use internet banking. Use internet banking to track if deposits are being continuously made into the bank account. So you can have internet banking that you check just every day if the money is actually being deposited at the bank and so forth. And any other point that can make sense. For instance, things like division of duties. You don't want the same cashier that receives the money to be the same one that goes and deposits it. Yeah, and so many other strategies, as long as your strategy makes sense and you're able to support it. Cool, guys. That brings us to the end of our lesson. I'll see you on the next lesson when we do a different topic. Cheers for now.